Futures Trading 101 Part 3. So in the previous two parts we just touched on some of the basics of what futures trading is and why we use it, why we trade it, some of the pitfalls, some of the costs, and basically how the mechanics of it works. Now this last part I just want to touch on two simple futures trading strategies. I'm going to be looking at the opening range breakout and we're going to be looking at the stochastic MACD cross. Now before the advent of online trading and a lot of charting packages, and now the advancement of software, so these particular strategies were difficult to trade in the olden days, probably 10 years ago, but now these are simple strategies with the advent of really great trading software. So let's go through the opening range breakout. So volatility occurs at market opens and after economic data. That's when a lot of volatility, a lot of these institutional traders or even those institutional algorithms trade very high volumes. So if we can identify the range of this volatility and then trade out of that range, either up or down, up is long, down is short, we have a simple breakout strategy. Don't try and get involved in that high volatility time, because most likely you will lose because it happens so fast. The best thing to do is let it calm down, identify that range and trade out of it. So we're going to be looking at the opening range breakout of the E-mini S&P 500 futures. So the New York Stock Exchange opens at 9:30 a.m. EST, Monday to Friday. So if we can identify and understand that the first 15 minutes of that open is very, very volatile and not to trade it, but if we can then define the range, the high and the low of that range, this is that first 15-minute candle here. So if we can define that, we can trade out of it. But also it's very important to understand the opening bias, the range. So in this case it's coloured in red by the software, so it's bearish, so we're only looking for a short trade here to sell, because we've defined a range, we've said that the bias is red, so the likelihood of a good trade is down. So then we look to sell one contract of ES, go short, 2 ticks below the opening range. So the opening range is defined. We want to make sure it passes that start line, if you like, and we go short. And then we don't want to be greedy. Close after 50 ticks, take the profit. Don't be greedy. These breakouts are powerful but don't necessarily continue. So what we need to do, 50 ticks on ES is a $600 profit. That's a good trade. So then the opening range that we've already defined turns bullish. The bias turns bullish. It starts to turn green. The price action starts to come back through this opening range. So then we can buy one contract ES. We can go long 2 ticks above the high of the opening range, because we've come down, we've taken the short, the price action is coming back up. We've gone neutral with the bias yellow here, but all of a sudden it's turned green on this candle close. Then we get a couple more candles and then we break out of the high of that range and we go long. Again, don't be greedy. Close after 50 ticks. Take your profit. There are more complex trade management strategies. We're not going to cover that today. This is just a simple strategy to trade that range. Sometimes that range is defined and the price action stays within there. Sometimes the range is defined, it breaks out and just keeps going that one way. But I wanted to show this example that there are continual trading opportunities when the price action comes back through that original opening range. So next, the stochastic MACD cross. So during certain market conditions, we see an instrument trade up and down within a range. So it doesn't really, continue to go along high and higher and higher or go short. So if we can identify that the roller coaster motion of that price action, both up and down, we have a simple stochastic MACD cross strategy. Now that sounds complicated. but we have a bit of software that does that all for you. So this is what the roller coaster looks like. So this is, again, it does it all behind the scenes, all the calculations behind the scenes, but it identifies good trading conditions. It gives you a start point. So when it moves through, that's when you go long in this case. It gives you a signal candle. So this is the 10-minute on 6B, which is the British pound futures, for example, so currency futures. So this is, 10, 20, 30 minutes before the actual trade goes in. It gives you a stop loss position. That's where your stop should be when you first initially get into the trade. But then that stop is adjusted here. So you can see this is where you manage the trade and start to lock in profits. Then when it comes back below that line, you take your profits. In this case, I think it was about 45 ticks. But then that roller coaster reaches the top of that range and starts to fall back down again. We get a signal candle here. The following candle takes us in the start point. We get a little bit of heat, then starts to come back down. There's our stop, and there's our trailing stop getting taken to actually take the profit. So the roller coaster's now got to the bottom of that range. It wants to come back up again. We get the signal candle. We get the entry candle after. Lots of heat here, but didn't take out the stop. And then eventually the trailing stop was taken out at this point. So as you can see, this is why it's called the roller coaster. We're trading that roller coaster motion of the price action within that range. Another great trading strategy. Now, sometimes an instrument will just go one way and we won't have a roller coaster. But it's about understanding that there are different market conditions to trade futures, and having those different strategies available are very, very important for those continual trading opportunities. So these two futures trading strategies are only made simple with software that does all the heavy lifting behind the scenes and presents those opportunities graphically on your trading chart, and then you just follow some simple rules. I'm going to put the links down below in this video to both the range breakout trading strategy and the roller coaster trading strategy. Some simple strategies to start trading with futures, some very simple rules to follow, and again, all the heavy lifting is done behind the scenes. Hopefully that helps, and hopefully I'll speak to you all really soon.